all these liquidity problems and the deflationary pressure kicks in and the market collapses to start 2026, and we get a massive print because we have a financial crisis. And Bitcoin was the one that was telling you the whole time, things look okay on the surface, but in the streets, they are far from okay. We are reaching Civil War, 1800 levels of civil distress. Or these guys, this administration is able to print the money, find the stimulus, and Bitcoin catches up to gold like this. It's one or the other. Either way, we end with Bitcoin at $1 million a coin in probably the next 2 to 5 years.
Mallers begins by pointing out something almost everyone senses but few can articulate. Markets feel calm, yet life feels increasingly unstable. Stock markets are not crashing. Bitcoin isn't collapsing. Nothing on the surface looks like a crisis. But in the real world, in the streets, nothing feels normal. There is an affordability crisis across nearly every dimension of life. Housing is becoming unreachable. Food, education, healthcare, and energy costs continue to rise. In the United States, policymakers are openly discussing 50-year mortgages, a staggering admission that the housing market is no longer functional. This isn't innovation, it's desperation, and this problem is global. Japan, a country that spent decades fighting deflation, is now facing visible inflation for the first time in nearly 50 years. Politicians can no longer pretend it isn't happening. The fiat monetary system, built on debt expansion and currency debasement, is finally colliding with lived reality.
Volatility was suppressed, not eliminated. And this is a very important point, okay? My point here is markets feel calm, but at the same time, nothing feels stable. I think there's an overwhelming feeling in society at large on the streets. And that if you look at price charts, I mean, Bitcoin's relatively flat. Nothing's wrong with the stock market, okay? But nothing feels normal. We have an affordability crisis. No matter what you want in life, it's becoming increasingly unaffordable. And the most pristine example of this is housing. You know, the United States and this new Trump administration has been very clear that they are on the brink of declaring a housing crisis and introducing the 50-year mortgage. That is how bad the affordability crisis is. And by the way, guys, this isn't just in the United States. Japan has entered a serious affordability crisis. Inflation is entering Japan. Well, it's always been there, and politicians try and gaslight us normal folk as if it doesn't exist. But it is now top of mind and really asserting itself for the first time in almost 50 years in Japan. So globally, those that have been living on this fiat regime, this era of money printing that has dominated humanity over the last century, nothing feels stable, yet markets feel okay. And so first and foremost, the fact that markets look normal. You look at a chart, you look at the stock market, nothing's on fire, right? You look at the price of Bitcoin, everyone's like, this is an extreme bear market. No, it's not. Bitcoin's at $88,000. Oh, this is a bull market. No, it's not. Everything feels normal. But it's that normalcy that we all know in our bones is unnatural. The feeling in the streets is depression, chaos, anger, assassinations, riots, crime. Okay, this tweet from Tyler I love. The boomers got no idea how radicalized Gen Z has become. Low implied volatility in asset prices aren't showing the vol. The volatility has been transmuted into the social contract. The world is going to get more dangerous from here. While first turning institutions are beginning to be built now, they won't take over until the fourth turning institutions officially crumble. A lot of instability is on the way, but that doesn't necessarily mean the government won't paper over the assets. So first, I just want to establish the elephant in the room is that it feels depressing. It feels scary. There's a lot of political infighting. There's been more assassination attempts now than any other period in U.S. history outside of the mid-1800s, which was the Civil War, which I'll get into in a second. So markets are okay, but people aren't. And again, guys, I need you to conceptually and philosophically understand the fact that volatility is natural.
To explain the current divergence between gold and Bitcoin, Mallers introduces one of his most powerful metaphors. Gold is cracking the window. Bitcoin is checking the thermostat. Gold provides temporary relief. When the house is burning, opening a window lets in fresh air. It doesn't fix the fire, it just buys time. Central banks are buying gold because they need collateral that isn't someone else's liability. China is running massive trade surpluses. Russia has been cut off from the fiat system. Sovereign debt is no longer trusted as pristine collateral, so gold reprices higher, from a $10 trillion asset to a $20+ trillion asset. That move matters. Gold at $4,400 an ounce is not trivial, but it is still a pressure release valve, not a solution. Bitcoin, on the other hand, is not designed to relieve pressure. Bitcoin is designed to measure it.
Let me now explain to you why gold is moving first and why Bitcoin is kind of stagnating. Let me explain. So first of all, just to be clear, gold made new highs last night. So did silver. And you're probably seeing this all over your timeline. Gold's now over $4,400 an ounce. Silver's over $69. Gold is like opening the window. It's like cracking the window. Bitcoin is checking the thermostat. You see where I'm going with this? Bitcoin's telling us the temperature. Okay? Gold is like getting short-term relief. You don't want to sit in the burning house. The house is burning. To get a little relief, okay, China is running these trillion-dollar trade surpluses, right? Russia has gotten sanctioned off the fiat financial system. Central banks have to recollateralize themselves on something besides sovereign debt. They're getting a little bit of relief by opening the window. Now, opening the window means a $10 trillion asset is now a $20+ trillion asset. Don't get me wrong. I'm not trying to play down the extreme of gold being $4,500 an ounce. I'm not trying to downplay that. But what I'm telling you is it's like cracking the window, okay? Bitcoin is not like cracking the window. Bitcoin is telling you the temperature. They're two fundamentally different things. So gold relieves pressure temporarily. Bitcoin becomes important when relief no longer works. And so we're in this interesting period where it's been openly admitted we have to lower interest rates. We have to stimulate growth. We have to reindustrialize. We have to redefine and rethink what the West is. We even have seen reports from the United States saying, do we need to be the world reserve currency? Were the economic policy decisions made over the last 40 years mistakes? And so to carry my analogy, I write at the bottom, eventually, we either need to fix the HVAC or get the fuck out of this house because it is burning. And so gold is relieving pressure temporarily for now. And not to say it won't in the future, but what I want to invest in is bigger than that. So if we go on, this is gold against the stock market, against the SPX. And this is my way of saying, things like technology and stocks and Bitcoin, they are more a reflection of liquidity. The world has seen nothing ever like Bitcoin. Bitcoin is a once-in-a-generation invention. Bitcoin is we are redefining money as we know it. Okay? So nothing is like Bitcoin. Bitcoin is the purest expression of currency debasement. It is the thermostat or the thermometer, the thing that tells the temperature in the sauna. Okay? But if you were to say the stock market usually trades on liquidity. Okay. The stock market, as I've said before, it doesn't trade on priced earnings. It doesn't trade on cash. The stock market is a Ponzi retirement account for the United States. Right. And so when you look and you see gold destroying the stock market, this again tells me that the liquidity isn't here. The AI deflation, the Bitcoin deflation, the internet deflation, ramming its head into the fiat inflation, hasn't yet resolved itself. And so while it's on fire and things are starting to burn down, windows are being cracked. Things are being repriced in gold terms. So I thought this tweet was like kind of a nice way to contextualize it. Like, this is Bitcoin over total US debt. And this is a good way, in my opinion, to really visualize that, like, it's working, but it kind of ebbs and flows. Because again, Bitcoin is not a hedge, it's a solution. Bitcoin is not cracking the window. Bitcoin is measuring the temperature. Bitcoin matters most when we either have to fix the HVAC, which is pay off the $38 trillion, or evacuate the house. That's when Bitcoin matters the most. And it depends. What do you want to own? You want a hedge? Sure, you could take a hedge. Go ahead. Hedge. Hedges are, the thing about hedges are 1% of your portfolio. Hedges are 5% of your portfolio. Hedges are, I like the way things are currently. It's just in case. That's not me. I don't know anybody that understands Bitcoin and owns 1% of their portfolio in it. Not a single person. If you understand Bitcoin, it's over 50% of your net worth. Easy. It's not a hedge. The current administration wants to print the money, wants to lower the rates, wants to reindustrialize. The Fed hasn't played ball. Trump doesn't have his nominee. The big, beautiful bill, all of that spending starts in 2026. The stimulus checks haven't been issued yet. The housing affordability crisis and the 50-year mortgage are in 2026. And so what do you expect Bitcoin to do? It tells you the temperature. It tells you the truth. So either all these liquidity problems and the deflationary pressure kicks in and the market collapses to start 2026, and we get a massive print because we have a financial crisis. And Bitcoin was the one that was telling you the whole time, things look okay on the surface, but in the streets, they are far from okay. We are reaching civil war, 1800 levels of civil distress. Or these guys, this administration is able to print the money, find the stimulus, and Bitcoin catches up to gold like this. It's one or the other. Either way, we end with Bitcoin at $1 million a coin in probably the next 2 to 5 years. The path to get there depends on the reality we have to live through. Bitcoin's only telling you the truth. It's only telling you the temperature. It's only telling you the time. Gold buys time. Bitcoin tells it.
Jack Mallers' message is not comforting, and it's not meant to be. Bitcoin is not here to soothe markets or reassure policymakers. It doesn't hide volatility. It reveals it. When asset prices feel calm but society feels unstable, Bitcoin is showing you where the truth lies. Gold cracks the window. Bitcoin checks the temperature. And when relief no longer works, when the house must be fixed or abandoned, Bitcoin stops being ignored. It becomes unavoidable,